And Roger, the question this week as we head into this is, do you think the Fed should raise 75 basis points once again? We're going to be watching for that inflation number that we see on Thursday. We'll be watching to hear what companies are saying as we really get into earnings season. But what's your expectation just based on what we heard last week from the jobs report?
My expectation, Becky, is that 75 basis points is definitely in play on the table. Markets, I think, are expecting 70–80% chance of that, and I have to agree with that assessment. As you said, I think it showed that the market still labor market still remains strong, unemployment rate still relatively low, and so while things are cooling slightly, I think 75 basis points is still the most likely outcome at the next meeting based on these numbers.
Do you think that raises the possibility of things breaking in the meantime? And I'm just talking about what we're seeing in the UK, the concerns about gilts and Treasury yields there picking up once again this morning.
Look, I think, as I've said several times, the risk of recession is very high, if that's what you mean by things breaking.
No, I wasn't talking about the economy. I'm talking about markets.
I think what we're going to see in markets is there are pockets where there's not quite enough liquidity. Markets are still basically functioning pretty well. The story in the UK is very much one of a poorly thought out, poorly communicated fiscal policy that spilled over into their gilt market and built around the way they do some of their pension funds have invested. So I think that's a unique story. Here in the United States, I think ample liquidity in most markets. So I don't expect breaking, but I do expect continued volatility.
There are a lot of people, and I will admit many of them are in business and have seen their businesses hurt by higher rates and have real concerns about the consumer's health in the future. But they are raising questions now saying, look, we have raised very rapidly. We have run these rates up rapidly. It's been a fast acceleration. And as a result, maybe the Fed should stop and look around, just give themselves a little bit of a breather, a little bit of a pause. What would your argument be? You sound pretty steadfast that you think it should be another 75 basis points. What convinces you of that?
I think the argument is, to date, while we've seen some slowing, it's just the beginning of slowing. Obviously, we'll see another inflation read on Thursday of this week, which will give us more information. But the Fed was pretty clear that they wanted to see what they describe as clear and convincing evidence that inflation itself is slowing, coming closer to the 2% target. And I'm not sure that evidence is out there yet. The other side of this is I don't think they want to be in a stop-start mode where they are communicating or miscommunicating their intentions to markets. So while I understand the argument that they've done a lot and maybe a pause would be appropriate, I think the other argument that is a little better is they're far away from their inflation target, and they have to maintain credibility in that regard.
Roger, just listening to you, I don't see how you can get around the notion that you're pointing fingers at the Fed for getting us into this mess. I would think, a lot of people think it's pandemic related, supply chain related, global inflation, all these things that happened out of the control. Are you saying they just overstimulated way too much, printed way too much money? The balance sheet is way too big, and when there were NFTs and memes and SPACs and all the NASDAQ was soaring, the Fed didn't do anything then. So are you pointing fingers at the Fed for being asleep at the switch, and now they've got to do this?
Look, I think the Fed was late to get started. They got caught up in the transitory versus permanent argument about inflation. I think they themselves recognize that perhaps they're on the wrong side of that discussion. It's also very clear that for a variety of reasons, the economy remained, or the monetary and fiscal policy both remained very stimulative as we tried to understand the impact of this once-in-a-100-year event. And so you've laid it out. There's supply chain issues, very ragged reopening from pandemic, and yes, monetary policy that got stuck in this notion that inflation was transitory and now clearly is trying to catch up. I think they'd admit that they started later than they should have in hindsight.